Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the week report for, and I keep on forgetting dates all the time, for August, for the week ending August 22nd, 2014. Let me, as usual, go over a couple of BGT or behavioral game theory stuff, and then I'm going to cover these charts. This is the chart of, first of all, what you're seeing in the background is real-time Globex futures on the move. This is the S&P 500 index futures, and the CME, the Chicago Mercantile Exchange, had delayed opening on the futures by about 4 hours due to some unknown problem. Not sure what it is. Could be hacking for all that we know. Futures opened, and right now we're showing futures up 6 to about 1994. And as we can clearly see from this channel symmetry, which I'm going to cover in a quick minute, you can clearly see that at this point, if you use this simple pencil or a nice crayon that I use, you can get towards 2010 as an intermediate term top in the market, and that's really what I'm looking at right now. So you're looking at another about 17 points on the S&P futures before we make an intermediate term top. Very important point here. I showed a calendar based on my day count, based on the lunar calendar, which I really don't give two hoots about, but somehow they seem to work. Next time you go for a nice walk with your dog or with your significant other on a beautiful evening, look up. If it's a full moon, jot it down, and I can assure you that the next day the market's going to be higher. Don't ask me why, but I've seen this happen all the time. Okay, half moon and intermediate moon phases in the middle generally are market turbulence. And again, I am no crystal ball gazing sort of new wave theorist or anything like that. I'm just telling you what I've seen. So saying all that, let me cover a couple of important things here. Number one, thank you and a very warm welcome to all the new members and new subscribers who have come in. I'd like to point out a very simple thing here. My service is a very unorthodox, unique way of looking at the market. I am no genius. There are fantastic newsletter guys, there are fantastic market technicians, technical chartists, on stock twits all over the place, and I've looked at them, and they're great. My difference is, and where my value-added service comes in, is the fact that I employ a very unique brand of pattern symmetry. I have extensive knowledge, and this is one thing I'll stand by, of global economics, cultural norms, political nuances that happen within governments, and I have a good knack of interpreting how the markets are going to react to that type of scenario. That comes from the fact that that I have had the luxury, as you can see from my biography on my website, of visiting and living through different parts of the world, and has given me a deeper understanding in global financial game theory, and very important. I'm a firm believer of game theory in the sense that there are always variable outcomes to a certain event, and every crisis is the same for different reasons. And the second thing is, I remain bullish on the US. I have been, and I will remain so. We seem to be it seems that the general consensus, regardless of what people say, has been one of despair. We are still in bunker mentality, myself included, in many cases. I've said this before, and I'll say it again. Despite my bullish leanings, I haven't yet, in the past year or two, since 2009-2010 period, where I have deployed more than 40% of my investable trading capital in the market at any given time, despite the fact that I believe that on a short-term basis, based on my charts and such, that the market would go higher. So what does that say? That says that even for the most astute of bulls, like I am at this point, and have been since 2009, that we don't even, we talk the talk, but we don't walk the walk. I use myself as a proxy. If I get that euphoric, which I never seldom do, or I seldom do, and I deploy, let's say, more than 60% of my trading capital in the market at any given time, and hold it overnight or for multiple days, then that's a sign of a mini euphoria. So when I see that happening to myself, I immediately go ahead, take substantial profits on my positions, and retrace back, go short, or sit on the sidelines with a substantial amount of cash. You should use that same theory, same philosophy on yourself. When you start to get too giddy with the market for whatever reason, because your portfolio just went up and one of my, or if you're following me and one of your positions went up by 50, 60, 100%, don't look at a gift horse in the mouth. Take it. You can always go back and trade the market again. It's really as simple as that. You don't need to make it more complicated. Let's not reinvent the wheel. Saying all that, what I see in the general consensus is still one of cautiousness, deep cautiousness, not just normal cautiousness, which is fine, which I think is very important, but skepticism. I also see deep self-loathing among American traders and investors and general Wall Street analysts who are systematically bearish on S&P earnings, yet the most recent quarter, which was supposed to be a complete dud, has beaten the general consensus by 7 to 900 basis points, or 7 to 9% overall on S&P earnings. People talk about PE, they don't even understand what the heck they're talking about. Okay, price to multiple is what you read on economics, high level, on a higher level, let's say senior level or MBA level finance class. In the reality of the world, price to earnings multiples should be aggregated with growth, which would be PEG. Google it, read up on it. So if a company is growing at a large clip, okay, and of course you have to look at the nuances of their balance sheets and the income statements and the sectors that they operate in, then you shouldn't be just looking at PE. And secondly, if you're really looking at PE and PEG and all the different metrics, then you're not a trader. Then you should be an analyst. Go back to business school, try to get a job on Wall Street or some other investment firm, and go back to being an analyst. As a trader, we look at patterns, we look to see what the momentum is, we look to see what sentiment is, we look to see charts, and we look to make money. We do need to have a fundamental understanding of what markets do, and we do need to have a fundamental understanding of how global economics works. But aside from that, very important warning. Stop being at an ideological war with the Federal Reserve Bank of the United States of America, because you're not going to win. Don't fight the Fed. I didn't invent the term. It's been around for years. Let the Fed do what they need to do. Monetary policy itself, as the Fed does, is not going to cure the problems that we have in the U.S. Fiscal policy changes from Washington, D.C. is what's needed, and as a staunch Republican, I'd like to say that that's exactly what's needed to jumpstart our economy and move it forward. You know my views. I've said it a few times on chat room, and I stick with the fact that we need to be the leader of the capitalist world. We don't need the capitalist mantle to be carried on to China and to India and other places. They learn from us. Let's not learn from, we need to learn from them too as to how to run this the ship. The bottom line is very simple. That the S&P 500 just opened for business after a delay, and at this point in time we look like the channels are moving higher, and again we will adapt to situations as we go. We are currently at 1994 on the ES, on the futures, and again we have our stock picks, we know where we're going, and again, be flexible, do not be dogmatic, but I've said my piece. I have a lot to say, and I'm not a great teacher. So a lot of the new people who are coming in thinking that I'm going to give them a 1, 2, 3, 4 lesson, I'll try my best, but you'll have to use your own brain cells to understand what I'm saying. You will have to read the links that I put there, the tweets that I put out there, as in economic and global articles, and you'll have a better understanding of what I am saying. So that's my quick spiel, as we say in New York, on the markets. And let's move on to the next video cast.